Good afternoon, everyone. If you think earning money is all that matters, you obviously haven't heard of personal finance tactics. And today we are here to learn it from the best. Vineet Patawari, CEO and co-founder of Elearnmarkets and StockEdge. He is a CA and holds a PGDM from IIM Indore. He has been into the digital business for the last 13 years. Customer obsession and scaling up are his mantras to live by. He is the business guy. He is also an alumnus of St. Xavier's and has been a visiting faculty in some of the premier educational institutes like St. Xavier's Kolkata, IIS WBM, ISBM, Bhawanpur College, IMI Kolkata, and whatnot. I hope everyone is super excited for this. The stage is yours, Vineet. Please take it away.
Thank you, Aditya. Thank you so much. So, it's always exciting talking to people, young people who are in their colleges, especially, I get especially excited when I see that, young people are getting excited about personal finance. They are conscious about, starting early in terms of managing their finances. So we'll have some half an hour's time which we'll spend together in terms of the presentation, and then we'll open it for question answers, right? So it seems that the house has around 45 people right now, and okay, great. So what I'll do is I'll share a presentation with all of you. So is my screen visible to all of you? Can I get a confirmation on the chat? All right, super. So I have got a lot of confirmations. Thank you so much. And this also confirms that most of you are listening, right? So thank you so much. So I'll start, and I'll keep it very, very simple, because I understand that finance is kind of, it creates a phobia in a lot of people, especially when it concerns anything related to money, anything related to managing your personal finances, and so on. So I'll try to keep it very, very simple. The whole idea today is not to give you a mantra in terms of that from tomorrow you can start investing and this is the process you should start. No, it's more about creating a mindset, right? And this is extremely crucial because finance is more of a game of psychology of your behavior rather than of some hard skills like how to manage your investments. Yes, that's important. The hard skills are important, but more crucial is the mindset. So we'll delve deeper into that rabbit hole of improving our psychology towards money. All right. So let's dive into that. A beginner's guide to the world of personal finance, and especially meant for people, my friends who have joined today, young folks who are in colleges. So yes, and I'm very excited to talk to people from IIIT. So let's go. Friends, this is more in context with our Indian audience, the Eastern world, where we always say that money can't buy happiness, and I want to break this entire concept, this entire perception. We are from a culture where talking about money has been a taboo so far, right? We use a term called money minded. If someone has money in his mind, that's considered as a negative character, right? It's a characteristics which is not very look forward to, and people want to stay away from money minded people. Why? Because we inherently has this resistance from money because of our culture. Now, if you believe that or not, we have this perception that money is not the most important thing, which I also agree. And we try to belittle the whole importance of money. And that's what we, that one single phrase, which it can be summarized into is money can't buy happiness. So definitely money can't buy happiness, but happiness isn't everything. In life, your entire life is not run only based on happiness. Money can't buy happiness, but neither can poverty. Money is like a hygiene factor, let me tell you. If it is there, it is, people feel that it should be there. But if it is not there, then you feel the real pain, right? It's something like cleanliness. If you are a person who is very conscious about cleanliness, if it is there, you are okay. You'll not praise people for having, maintaining such a clean workplace. But if it is not there, probably you will be completely off. Similarly, I'll tell you about a study that when people talk about talent, one of the biggest impediment in people recognizing their talent was poverty. When you live in sheer poverty, it's extremely difficult to look into your talents and nurture them. That's the reason, psychologically we have quota system in our country, because people coming from backward classes, it's extremely difficult for them to get into that growth mindset. So friends, that's what money is extremely crucial from individual perspective, from family's perspective, and from the society's perspective. And I'm sure I don't need to tell you that everyone will agree on that fact, right? And on the lighter note, anyone who tells you money can't buy happiness never had any. And whoever says it can't buy happiness, they don't know where to shop. So let's move. Once we have established the importance of money in our life, let's move forward. And this is very, very important. If anyone has this mindset that money is not important, they actually need to change it right away. And that's why I have put this slide at the top of the presentation. Let's move forward. Now, what money can buy, if not happiness? Money can buy the ability to do what you want, when you want, with who you want, for as long as you want. And this is actually freedom. This is priceless. It is the highest dividend money can pay. This quotation by Morgan Housel from the book, The Psychology of Money. It's an amazing book, and I strongly recommend all of you to pick up that book. It's an easy read. You can read it in a couple of days. Amazing read, and it should be a compulsory read, I feel, in the graduation courses, where people also need to prepare themselves on how to handle money when they start earning it, either through a job or a business or a startup or anything. How to handle money. That's extremely crucial. Friends, if you have the right amount of money at the right time in your career, right, it gives you freedom, and you should aspire for this freedom. This is something extremely crucial, where again, how talented you are, your talent can be, you can nurture your talent if you have that freedom. So aspire for that freedom. Now let's dive deep into this fixed, when we talked about the mindset. Let us delve deeper into that. Friends, this is the biggest game changer in your relationship with money. Most of us have fixed mindset when it comes to money. Let me give you some example. I'm not saying it's negative. What I'm saying is fixed mindset, it's a constraint, it's an impediment in your growth in terms of increasing your wealth. I have put in statements which are neutral to the best, and they are not at all negative, but it has got a fixed mindset. Let me tell you, I come from a business family. I know everything about money. You hear people like that, right? And on the other side, you have people who say that I have, no one in my family ever did any business, so I don't know anything about money. Both these statements are extremes, but are both from fixed mindset. They depict fixed mindset, right? That you have, and you in one end you feel that you know everything, on the other end you feel you don't know anything. Both are extremely incorrect statements. You need to be confident that you can handle money, and you need to be not overconfident that you know everything about money, because it's a lifelong learning to manage your relationship with money. Another thing is, when people say I'm working for money and having a good lifestyle, then this is also a deterrent, because if you work for money and just having a good lifestyle, once you have that, the passion actually goes down, it dwindles, right? And your passion to create wealth is extremely, it gets impacted, because see, what happens is, saving is an extremely crucial element of your wealth creation exercise. And when you feel that you are earning just to spend, and have a good lifestyle. You can even take big loans to maintain a good lifestyle. That's where the problem starts. That's why the statement that I'm working for money and having a good lifestyle, if I'm earning, I'll spend while I bother about future and so on and so forth. This is fixed mindset. On the contrary, I invite all of you to create a growth mindset. But first of all, let us understand what is it. When you as an individual, you say that the world is changing and I need to adapt to it, whether it is the investment, the kind of investments which are there. See, earlier it used to be fixed assets, real estate, gold, all kind of physical assets. Now the world is moving towards financial assets, like, stock market, you have equity stocks, you have mutual funds and so on. Now things are even moving further from there, and newer asset classes like cryptocurrencies, and you have NFTs, which are also coming forward, right? So point is, if you are stuck with your old mindset where you don't want to adapt to new, you will become obsolete and your wealth creation exercise will get hampered. So you need to understand that you continuously need to adapt yourself. Another thing is, to become rich, I have to make money work for me. This is growth mindset. See, when people always say that I need to work hard to earn money, I agree, you need to work hard. But that money, that income is just one kind of income, which can be your active source of income. I'll talk more about it in the subsequent slide, but you need to make your money work for you. And there comes the concept of putting aside certain money, which is savings, investing it, and making it grow using the power of compounding, right, friends? So saving is where the whole cycle starts, and you want to make your money work for you rather than you working for money. This one thought process is the biggest differentiator in you earning income throughout your life and then retiring with a small income, right? And you never become rich, versus you earning for yourself, saving, investing, creating wealth for yourself, and that wealth makes you actually a wealthy person. So growth mindset is extremely crucial. Now, with the growth mindset, I told you, the biggest problem, I'll first give you the problem. No one wants to get rich slowly. Everyone wants to get rich quickly, overnight, maybe in a month. That's the max, a quarter. Don't give me like gyan that in 20 years, 30 years, you will become rich by this process. Let me tell you, friends, time spent to create your wealth is extremely, extremely crucial. And there is no alternative to it. There never was, there never will be. The only thing will be, you will always have outliers who become overnight rich by sheer luck. But those are outliers. You cannot prepare yourself to be an outlier. You can always prepare yourself to be there in the process. And what is the process? The process was told to us early in our school days with a simple formula, which you see on your screen. I assume most of you are engineers and you must have seen that. Anyways, everyone sees this formula, which is, can you quickly tell me what formula is this on your slide in the chat? Obviously. Wonderful. So compound interest formula. Yes. So where amount is equal to principal into 1 plus rate of return to the power the time period. Friends, time is money. And when I say time is money, let me give you the background of this. The most amazing scientific mind, this quotation, which I'm telling you right now, is attributed to him. I'm not 100% sure whether he actually said this or not, that the compounding, or the power of compounding, is the 8th wonder of the world. Now, what does that actually mean? That if you let something grow for a considerable period of time and it compounds over every period, then over a period of time, it will grow exponentially, obviously, right? And this will become huge. Human minds can only think linearly. They cannot think exponentially. That's why we always see what has been the growth in 1 year, 2 year, 3 year, 4 year. But when it is a longer period and when the return, this compound interest, which means interest on interest, right? This eventually becomes bigger and bigger. So this formula, A is equal to principal. Principal is basically the savings which you do. Whatever money you are earning, either out of business or startup or whatever you're doing, some profession, some freelancing, whatever money you are making, if you save, if you spend less and you save some money out of that, that goes into the principal in this formula because you have invested that money. R is the rate of return which you generate. If you invest in mutual fund, you will generate some other rate of return. Direct equity may be something else, cryptocurrency something else, and so on and so forth. That is R. And T is based on our patience, which is time, right? The time period for which you are invested. Friends, let me tell you, as investors, as we mature, you must have heard that there are analysts, there are fund managers, there are experts. Everyone in this world is struggling and trying to work on this R, which is rate of return. Tomorrow, if you get into cryptocurrencies, why are you doing that? To generate a superior R, rate of return, right? This is phenomenal. This is so big that everyone is focusing on this. But let me tell you, I strongly believe, and so does some other experts, that T is very, very important, more important than R. R is influenced by our skills, by our knowledge, by our information which we have, and we can't control it. You cannot control the movement of stock markets, cannot control how erratically the cryptocurrencies will move. You cannot control any of that, right? But you can control one thing, that you will stay invested for a long time. And over a long period of time, we have always seen that any asset class, especially the riskier asset class like equities or cryptocurrencies or things like that, have grown, right? Nothing grows like this in one direction. There are ups and downs, but the momentum is always on the positive direction. The problem is you cannot catch the security, you cannot invest in it when it is at the lowest and you get out when it is at the highest. You cannot do that, right? You cannot time the market all the time. So you need to learn the art of staying invested, which is more of managing your psychology. Once you have mastered that, then you should work on R, which is the rate of return, by identifying different kind of securities to invest in, right? By diversifying your portfolio, by learning about the investment processes of each security. If you are investing in gold, it has different parameters based on which you invest. If you are investing in real estate, very different. If you are investing in stock markets directly, you need to study those companies, you need to look at their price history and then predict what will be the future. If you're investing in cryptocurrencies, then it is very, very different from anything else. So what I'm saying is, if you have worked on your psychology of staying invested for a long time, the next thing you work on is to create superior rate of returns, right? So this is the process, and time is money. Okay. So I told you that in a subsequent slide, I'll tell you, the mindset. Again, we are coming back to the mindset. If you have any questions, you can type on chat. We can probably take it later, right? I'll quickly cover the entire presentation and then we'll jump into the question answers. Friends, all of us here, we need to understand one thing, that these are two very different mindsets, making money versus saving money. And these are at times diametrically opposite thought processes. Let's say you are an amazing engineer, you get a job of a very, good package and you start making good money, right? So you took a risk of getting into a career and probably you worked very hard, you were very optimistic, you got a good job. Similarly, you started a startup, it was a very risky affair, but you actually made it and you earn a lot of money. So you took risk, you were optimistic, you were sticking around in spite of all the failures, all the problems, you were sticking around there and you are working very, very hard. That's what is needed to make a lot of money, right? That's always what is needed there. But friends, you should have this. The left-hand side is extremely important, but so is the right-hand side in long run, which is saving money. And saving money needs a different thought process altogether. Here you need to take risk. Here you need to be risk averse, right? If you need to save money, you need to think that the money which you are earning, you cannot just put everything in one basket and let's say, not save anything for future. So this is being risk averse, being humble, that the money which you have earned, the amount which you have saved and invested, it can go away and you have to work from scratch again. Being humble, being frugal, right? You need to understand, the more you spend, the less you save. This is very, very simple thing. And you need to be frugal to spend less and save more. Non-action, when you need to stay invested for a long time, you need to get out of that excitement zone where you want to trade every day, you want to see your securities every day, get out, come in. No, nothing doing. If you want to stay invested for long term, you review your portfolio once in a while, but not every day basis, right? So that's non-action. So you see, it's almost opposite. So friends, you will see a lot of people in your families, in your society, that they have made good money, but eventually towards the second half of their life, they lose that money, right? They go up like this, they spend a lot of money, right? They have beautiful cars, home, foreign tours and so on and so forth, but slowly you see they are not doing that good because they took unnecessary risk and they didn't save for the winters. So saving money is extremely, extremely crucial, friends. So building wealth has a little to do. This one quotation is a beautiful quotation, very, very deep. You need to understand this. Building wealth has little to do with your income. Obviously, you should have some income, right? But it has little to do with your income or investment returns. That is the R. The income is the P, which you are saving basically, and the investment returns are, and has a lot to do with the savings rate. That is the amount of saving which you are doing. The more you save, the bigger is the investment, right? And the more longer time you stay invested, bigger is the time. These two factors will make or break everything in your wealth creation journey. So friends, remember this. Now, since a lot of you will be actually entering into a zone where you will start making money, right? So this slide is extremely important for you. I think I missed a slide. Okay, sorry. So yes, we have talked about the mindset, fixed versus growth. Now let me tell you, how do you make money, right? Generally, when we think about making money, we only focus on the earned income. What is earned income? You start a job, you get salary every month. That is earned income, for which you are giving your time and efforts, and for that you are getting a salary. Similarly, you invest time, effort, and capital and start a business, right? You get earned income, right? You do work as a freelancer, you get a fee, that is earned income, where you personally is spending your time, effort, capital, labor, all of that and getting some earned income, right? Versus, so most of us, for most of our lifetime, rely only on earned income, right? And we don't explore portfolio income or passive income. Friends, if you need to create wealth for yourself, please take it from me that you cannot do it just based on your earned income. You need to create the other two streams of income. Now, what are they? So first is passive income. Let's start from the right hand side. Passive income. Passive income is basically when you create an asset, right, which gives you return in future without you getting involved in that. That is passive income. So let's say you wrote a book, right? You wrote a book. Now that book is getting sold in market, and for every copy you are getting a royalty, and it goes on for lifetime. You have to work marginally, for every book sold, it's almost zero. So it creates a stream of income without you being personally involved in future, right? Obviously, you need to upgrade that book and all of that, but that's a little work. It's not like for every book you have to write every time, right? So that's passive income. Similarly, let's say you create an amazing influencer marketing profile. You have thousands of followers on social media. Now companies are paying you royalty to, to market their product. passive income. You created an amazing YouTube channel, and from that you are earning advertisement income, passive income. You created a blog, from there you are earning passive income. You wrote a beautiful software and gave it to someone, right, as a patent or something, and you get royalty out of that, passive income. You created a formula, some chemical formula based on which some drug is made, and it helps human society. It's sold to some pharmaceutical company and they pay you royalty, again passive income. All of that is passive income. So if you have some special talent, you should start working on that to create passive income for yourself, right? Third one is portfolio income, where even if you don't have any talent, right, and you can't create an asset for which you can get a passive income. In fact, sorry, there are certain more examples where you need not have talent. For example, you bought a home, you put it on rent, right? You get passive income. You have a car, you put it on rent, you get passive income. So all those things. Now let's look into portfolio income. So I told you, portfolio is your investments, right? Where your money starts working for you. So in passive income, you created an asset like a car, a home, and that was working for you. That was generating income for you. But portfolio income, you have earned some money, you put it in assets, and that money makes more money for you, right? In form of interest, in form of dividend, in form of your share price increasing, which is capital appreciation, in terms of your cryptocurrencies price moving up, in terms of the NFT price moving up, in terms of your mutual funds doing good, right? You have a diversified portfolio, you invested in real estate, the real estate price is going up, all of that. So all of that is portfolio income. And this is the real wealth creator. And the earlier you start, better it is. Let me give you an example of the richest, and the most famous investor in our lifetime, Mr. Warren Buffett. He said that he started investing at the age of 11 and he feels that he was late. Now, at the age of 11, he feels he was late. I tell you why he feels like that. When you have kept your money invested for a long time, and after a long time, let's say 40 years, you invested for 40 years. Now, because of the compounding, this amount has become so big that on the 41st year, there will be a huge jump in your entire wealth. That single 1 year, because of the accumulation of wealth for so long, and now you will have earning on the 41st year, it will be huge. So if you have, let's say, $20 billion, you will reach to, let's say, $30 billion. I'm just giving you an example. So that is a big jump in terms of your wealth. So that's why start as early as possible investing in money. Explore the avenues which you don't know and you are scared of, right? Assume that you will lose the entire money. Invest 2,000 bucks, 3,000 bucks, 5,000, 10,000, whatever you can spare, and you can afford to lose 100%. Start with that. Open a demat account, start trading, right? With a small money. Always remember you might lose it. If you can afford that, do it. Otherwise, please don't do it, right? So that's portfolio income. You don't know anything about cryptocurrencies, start learning about it and simultaneously open an account, right, with a crypto exchange and start trading. Why I'm saying simultaneously practice? Because if you just learn and if you don't practice, it's difficult to retain anything, especially with respect to money. So please do that. Otherwise, at least start with paper trading. That means you assume that you have traded today, you bought the security at this price, you sold it at this price. And prices, what price it is trading, it is easily available. There are multiple websites, apps, etc., where you can track the prices of any particular security you are interested in, right? So what are you putting your money in? Convert your earned income, which means your salary, your rent, whatever earned income, into portfolio. Earned or passive income into portfolio income. So ultimate destination is your portfolio income. Learn to evaluate risk and reward. Know others and know yourself. What I mean by know others is you need to know the products in which you are investing. Obviously, crypto kya hai, what is equity, what is stock, what is mutual fund, and so on and so forth. Know that, right? For that, you can, that's what we help people with at Elearnmarkets. we train people on various aspects of stock markets or various aspects of mutual funds and other asset classes. So how to trade, how to invest, and so on. That's one side. But as I told you, it's about mindset, and that's why you need to know yourself as an individual, right? Because let's say you lose your night's sleep when you lose, when you lose money, you invested at 20,000, an example, and it became 10,000 for some reason over a period of time, and you lose your night's sleep and you cannot think about anything else other than that, then probably you are a risk averse person. You are not a risk taking individual, right? And you should avoid this then. So you have to adjust your investment style based on your risk taking capability. So for that, you need to know yourself as an individual, how much risk you can take, right? So evaluate that, think about it. Are you an aggressive individual in terms of money, or are you you want to take it slow and steady and you don't want to lose money? You should never lose money, right? But there will be chances, there will be cases where you will actually lose money, right? And you should know that beforehand, and you should actually calculate so that your psychology is not disturbed, you don't lose your night's sleep, right? So know yourself. Keep it simple. That's all. Keep it simple for the time being. Slowly and slowly, when you learn more, you will accumulate more information. It will become complex. At every stage of your life, try to make it simple, because simple is what makes it more effective. Let me tell it to you. So save as much as you can. Some pointers from my side: save as much as you can right from today. Even if you are getting small pocket money, try to save from that and start investing. Secure yourself as much as you should. Probably, when you get out and you have a job, you become a crucial earning member of your family. The lifestyle, the standard of living of your family will get impacted if you're not around making that money. That means you should create an alternative channel in case of when you are not there. If something happens, then the insurance company gives a substantial amount to your family so that their standard of living can be maintained. So secure yourself as and when needed and as much as you should. Avoid loans as far as possible. Right? We might have already taken a student loan, that's okay. Education loan we might have taken, but try and avoid any kind of loan in the future as much as possible, as far as possible. Try to make money and then buy a car rather than, getting into a 6-year, 7-year loan period, paying back for a car. Avoid that. Make money. When you have a spare 6 lakhs, 7 lakhs, 8 lakhs, buy the money, buy the car which you can afford. Right? You can buy a 10,000 cell phone. You can buy a 1 lakh iPhone. Right? For iPhone, probably you will take a personal loan from these websites which are giving you, which makes it very, very simple. You don't even understand that when you pay it monthly, you are taking a loan and you are paying interest, and the total amount you pay is much more than the price of that asset, right? So please, friends, avoid loans as far as possible, because see, it's exactly opposite of wealth creation. It's wealth destruction, because you are paying someone to use his capital. He is making money work for himself because his money is earning interest for him. You are taking that loan and making money work against you because you have to pay interest. So please avoid loans as much as possible. Learn as much as you can apply. That's why I told you, when you learn, try to apply it simultaneously. Plan as far as you can think in your life. And I feel personally, in terms of your personal finance, you will be set, right? Take these simple steps and you will be done. So that's all from my side, friends. Now quickly about me. As I already said, my name is Vineet Patawari and I went to IIM Indore in the year 2008. I'm a chartered accountant. We started this company where the motto was to make people better investors and traders. We started with Elearnmarkets, which is now around 1.4 million verified users, 350 courses. We have 200 plus webinars. We have multiple market experts. Anyone whom you see on TV and other places who are market experts are there on Elearnmarkets teaching people So we have created a platform, a marketplace where people can come and train. So these are highly experienced individuals who are teaching trading, investing, derivatives trading like futures and options to people. So that's Elearnmarkets for you. And Stockage, which is all of you can download both the apps today on your mobile, and it's both the platforms are freemium. Most of the content is for free, right? And for all of you, I think the free content will suffice. So we created Stockage. Stockage it makes stock market analytics simpler for you by creating a wide range of research, self-research and analysis tools. See, our idea was to empower retail individual investors like us by giving them tools which were earlier not available to them or were very, very expensive. We created a free tool almost for people to use it. And that's why, it has more than 2 million app downloads, and we are at 4.4 rating. People, give very good, amazing feedbacks, and we work on the feedbacks, they give. So that's what Stockage is there. Download it. You can evaluate any mutual fund, any stock, and there are many other things which can help you to become a better trader and investor. So Elearnmarkets and Stockage for you, friends, to help you in your journey. And I assume most of you are beginners. To help you with that, today we are giving a course free, which is Stock Markets Made Easy for you. It's worth $1,000, and we are giving it. It's an online course, recorded program, right? And you need to use the coupon code Dhruva21, DHRUVA, especially for this event which is happening. So Dhruva21, use this. For this, you will be given a link soon in the chat, and probably it will be shared by the people who are coordinating with you. So Stock Market Made Easy, you can even search it on Elearnmarkets, Stock Markets Made Easy. That's the name of the course, and the coupon code is Dhruva21. So friends, I would love to stay connected with all of you, right? If you have any question, you need any guidance, any help, I'll be more than willing to do that. My email ID is vineet@elearnmarkets.com, and rest, Vineet Patawari, Patawari. You can search on Twitter, LinkedIn, and Instagram, and connect with me. Ask questions there. I'll be happy to, I'll be super glad to reply over there. So that's all from my side. I hope I have been able to add some, thought process inside you, some spark wherein you will be happier to work further on your personal finances, creating your wealth. If there are any questions, I'll be super glad to take them up. Thank you so much.
Hello, I'm Prasanna. Is my audio clear?
Yeah, your audio is obviously clear. Perfectly clear.
Yeah, so like you were saying, how one should be avoiding loans as much as possible. So my question is, like, for someone who is considering studying abroad for their master's, so like, is taking an educational loan a good idea?
See, there are some good loans and there are some bad loans. Okay? When by taking a loan, you are creating an asset for yourself, it's a good loan. I believe that. So for example, you are educating yourself and you are investing in yourself. That's the best investment you can make, because then you will have a better earning capabilities in the future, and you will be able to pay back that loan easily, right? So education loans are not bad. After a point, after a stage in your life, home loans are also not bad, right? But you need to manage it properly. So my point is, evaluate, are you creating an asset or are you creating a liability? For example, if you buy a car, when you buy a car, let's say it's worth 10 lakh rupees. You took a loan, you bought a car. If you go back and tomorrow you want to sell that car, that's anyways has eroded by 20-30%. You cannot sell it more than 7-8 lakh, because the car has become a second-hand car, a pre-used car, even if it is for one day, right? And it loses 20-30%. The more you use it, the more it loses. Whereas, let's say if you have bought a home, it will never deplete in value, it will always increase. So my point is, think about it. What is the reason you are taking loan, and then do it. Yeah. So home loan, education loan for abroad, studying abroad, it's a good loan. But yes, you should evaluate the interest rate at which you are taking, and see if there are scholarships available and that can reduce the loan which you have to take. Evaluate all of that. Yeah.
Yeah, that makes a lot of sense. Thank you.
Good afternoon, sir.
Good afternoon.
So firstly, thanks for this presentation, sir, because this presentation was very useful because every citizen in India must know this because everyone are getting fear of this stock market or something. So my doubt is most of the people want to create a wealth and they have started investing in stocks or mutual funds. But when it comes to stocks, most of the people are investing which are not fundamentally good, and also they are destroying wealth for over a long period of time. So how to overcome this, sir? Because most of the people are selecting the stocks like which will double in a year or double in a month or double in a some span of days, and they are not getting into fundamentals of the stock. So how to overcome this, sir? This is a matter.
See, perception needs to change in terms of, stock market being a place to make quick money. This is a very, very wrong perception which is there in majority of people who invest in markets. Similarly, now another fad is coming, which is cryptocurrencies. It's going to stay. It's a long-term thing. It's an amazing technology, right? Cryptocurrencies backed by blockchain, right? But again, investors are coming into it. They want to make quick money. That's where the problem is, right? If you work on recommendations, tips, suggestions from someone, you have heard it on the channel. All of those are wrong places to research, to evaluate, and find out a stock. No, that's not the way you do it. You have to see that the companies which are making consistent cash flow from operations, the business which they are doing, they should generate cash flows. They should generate regular EBITDA, which is, simple. Sorry, I'll not. I'll try to keep it as less jargon as possible. So they need to consistently make money out of their business, right? And this should be consistent. And you need to understand what kind of product the company is making, what kind of management it is. Is it, in simple terms? People don't look into all of these. They only see that someone recommended that this is the stock is at this price, it will move to this price. You buy it today, you sell it after 5 days. This is not the way you make money or wealth out of markets, right? If you trade on a regular basis, you need to have your own trading psychology, your trading processes, that you will buy at this point, you will sell at this point. You should have your own methods. So point is, you need to learn. You cannot make money in stock markets without learning. It's like driving a car, right? It's easy when you have learned it. It's extremely difficult when you don't know how to drive. And if you are given a steering, you're at the back of a steering, you know what will happen if you go into, on the streets. So friends, learn it first. Learn the art of identifying fundamentally strong stocks for long-term wealth creation, and technically strong stocks if you want to make money out of trading. So these are two very, very different concepts, but you need to learn both in case you want to make money out of stock market, and then sky is the limit. You can make a lot of wealth, a lot of money out of markets.
Thank you, sir.
Hi, sir. I'm Rishabh here. So I just wanted to ask your opinion about NFTs basically, because it is very much good technology. Like it is very much hyping so much today. Like every YouTube video you see, they are saying about NFTs and how they would be changing up, what picture gallery would be looking like in the offline store. So what are your ideas about like NFTs and investment in it?
NFTs are amazing. It's an amazing application of a technology, right? And especially in the world of the art, which used to be investment class, but for a very few selected people. Now it's open for masses at large. But the hype which is created, right, out of NFTs right now at this point of time, it's disgusting at best. And this will create a bubble. Bubbles are not always bad. The bubbles get built, then it gets burst, and it leads to correction in the prices. So something which is being sold in millions right now, the real value of it is probably, let's say, some thousands. right? After that bubble is burst, people understand that yes, this is valuable, but we should not give it too much value, extraordinary value, right? This happens with all the technologies. When they are launched, when they are early adopters, they are ready to pay more. But when the technology becomes available to everyone, it gets rationalized to a certain level. So I'm saying NFTs or cryptos or anything backed by blockchain will be our future in terms of investments, healthcare, education, and so on and so forth. But especially any kind where there is a record keeping, but you should not hype it too much. You should see areas or places or time periods where you get the assets at right prices. You see, if you look at Bitcoin, it moves like this, it comes down. So if you can buy on dips, basically that's where you should do. You should not get overexcited and buy it at any price. That's what people are doing. So yeah.
Thank you, sir. That's make a lot of sense. Yeah. Thank you.
Yes, so I had a question. So like, let's say I collect a little bit of money and start trading directly in the markets. How do I keep myself in check? So if I'm learning from online resources and my friends and stuff like that, how do I keep myself in check? And after like 1 year of time period, how do I validate myself and check if I'm on the right track or whatever?
Okay, great. Good question. So, the journey when you start will be very, very exciting. Okay. Anything you do, let's say you went to a casino for the first time. It's a wrong thing, right? But it will be very exciting at the beginning because you will see so many things and you will have beginner's luck and you will make money. Similarly, in stock market, which is exactly opposite of casino, because there is a science behind it, right? There is a way of making money out of this, but it will be very exciting, right? And you might get into that excitement and not get into the learning of the science. So you need to decide 3 things before you jump. How much time you are going to spend in trading every day. Let's say you decide that I'll give only 1 hour because I have my studies, I have 20 other things. So it should not become an addiction like video games, right? I spend all my times and I forget about what's happening. No, give it a particular time, decide 1 hour, 2 hour, whatever it is. And in that, try to understand what's market is happening. Second, decide on the amount of money which you want to put in, right? Stay committed to that. I want to not cross 20,000 or 30,000, 50,000, 1 lakh, 20 lakh, whatever it is, whatever suits you. I cannot decide that for you, right? And the third one is decide, if it is stock markets, decide on a set of stocks that I only look into these stocks. Otherwise, what happens is, see, today you get some news that IRCTC is doing amazing. Tomorrow you get something that Z is doing amazing, right? And you should buy it. You should have your universe of stocks in which you will do your research and you will do your trading and investing. Let's say you identify through some methodology like basic 20 stocks. I'll just focus on these 20 stocks and I'll be, go deeper into that, learn about the management, about the cash flow, about their products, about their future, what predictions they are doing and so forth. And I'll become master of these 20 stocks. That's all. I'll not go into, there are 5,000 listed stocks in BSE. Right? If you look at cryptocurrencies, there are, I think, more than 300 cryptocurrencies, or I don't know what's the exact number right now, hundreds and hundreds. You should decide that I'll only focus on understanding 2 or 3. That's all, right? So how much money, how much time, and which stocks, you should identify that, and that will keep a check on yourself. After a year, probably, you'll understand that you are master of these stocks. You invested in them slowly. Whether you made money or not, that's the best parameter to decide. Obviously, making money should not be in absolute sense. It is always with respect to the market. If the market tanked by 10% in this period and your portfolio was only down by 2%, you did better than market. Right? If the market went up by 20% and you made 25%, you did better than. That's how you judge yourself. That's the benchmark. Okay.
Yes, so that makes a lot of sense. So I've collected a few questions here. If you don't mind, can I ask them? These are from our audience.
So another one question, because I think it's almost an hour, and then probably the remaining you can email me, right? I'll try to answer them on email.
Okay. Okay, just a second. Yeah. So here's a question: if there was just one form of investment you could be making, be it mutual funds, crypto, whatever, which one would it be?
I'll personally be doing, if there is only one, right? I'll be doing, conceptually, I'll say invest in yourself as an individual, continuously grow yourself. But to answer your question, stocks, direct stock market investments, because that's what I understand best, right? It should always be know yourself first. If you know something like stock markets, invest in that, because it's very important to know what you are doing. So stock market.
Okay. So I think that brings us to the end of the session. I hope all of your answers are cleared and y'all had fun. Thank you, everyone. And for those who missed out on the session, the recording will be uploaded to our official YouTube channel. So stay tuned for that. And don't forget to make use of code DHRUVA21 to get the course for free on the website listed on the chat. Thank you, sir. Thank you for your time.
Thank you so much. It was an amazing, experience talking to all of you. Wonderful audience, wonderful questions. Thank you so much. Stay connected. Thank you. Bye-bye.